I would definitely say investing in whether it be a business coach or investing in going to conferences. That's another place I found some really good partners and just people like I'm in a mastermind and we see each other at conferences and it's just nice to connect and get together, grab a meal together, So I definitely recommend spending the time and money if you really want to focus on this. I think there's a lot to be said for getting in the room with people, not just over, the internet, but over in person, I think is really valuable. Even your local investment community, there's a lot of value there, and you're going to meet a lot of different people and different things that they're investing in and ways they're investing in real estate. But I think there's just a lot to be said for getting in the same space with people and having one-on-one conversations or group conversations. And so those are probably the biggest ways. Like I said, masterminds, I think, is also helpful because we're getting to talk about operators and hear about what's, if they've worked with this group before or this group. It's a small world. I mean, at the end of the day, there's a lot of groups out there, but there's also things that have happened and you can eventually figure it out, find it out. You want to know what you're getting into and again, where you're putting your money. And when I'm working with somebody, I want to make sure that they're approachable, that they're responsive, that they're going to get back to me within a pretty good amount of time. I'm not going to be sitting and waiting for a week or 2 weeks to get a response, Yeah. And I want to see their track record. I want to know that they're a really solid operator. They've been doing this for a while.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Rebekah, welcome to the show. How you feeling today?
I'm feeling great. Thank you, Peter. Good to be
Awesome.
here.
Hey, thanks for being here with me. So why don't you introduce yourself to the audience in your own words?
Yeah. So I live in Lynchburg, Virginia with my husband of 16 years, and we have 3 kids, 2 girls and a boy. We stay busy with them. We are entrepreneurs, and I've been in real estate, investing for 12 years now, coming up on 13 years. And so been in the space a long time, but I did work in tech for about 10 years doing sales and marketing and did real estate on the side. And then back in 2020, decided, hey, I'm ready to dive into real estate full time. It's been good to us so far. My dad actually is a big investor out in Montana. So I'd been watching him since 2004, and he had just been, really growing their wealth. Went from not having a whole lot of money as a pastor. As a kid growing up, I remember things were always really, really tight, to just seeing him grow that exponentially and have time freedom. And I get to do something he really enjoys. And so back in 2020, decided, hey, I'm ready to dive into this full time, and shifted my focus and we ended up buying some more rentals. I got my license as a realtor, and then I stumbled into the passive investment world with a fund to fund, worked for a fund of funds group and just learned a lot, and was at another firm doing value add multifamily before we started Tailored Investments last April. So it has been a fun journey, and I just love real estate. I'm passionate about helping people put their money to work in real estate and be able to enjoy those benefits without the hassles of being a landlord.
Yeah, it's always fun to talk to somebody who's passionate about real estate. In some of these conversations with some people you talk to, whether they're new to the business or even they've been in it for 20 years or so, sometimes they don't have that passion, or they use it as a vehicle for wealth, and that's about it, right? You know what I mean? So what would you say, what is it about real estate that kind of fuels that passion for you? Is it the people? Is it the deals? Is it the buildings, the architecture, the design? What would you say where does the passion come from?
I think it's everything. Honestly, all those things you just mentioned and more. I really love the fact too. I think what it comes down to at the end of the day is you're able to get with real estate, cash flow, I love cash flow. You're able to get appreciation. I mean, I've seen properties appreciate out in Montana where I'm from 30% in the last couple years. Just everything shot up in price. You're able to see equity growth as your tenants pay down the mortgages. You're able to see that diversification. You're able to get tax benefits. You're able to, in these deals that we work on for our investors, it's very passive. I mean, there's just so many avenues to enjoy real estate. It's a hedge against inflation. It's so powerful. And I love the fact that it can also provide some time freedom because you're able to, we've been on vacation on the other side of the world and I'm still getting paid rents from from my tenants every month. And so it's powerful in the fact that I don't have to be here. I'm still earning money from my properties on a monthly basis. And that's really amazing when you're a mom and you're, balancing a family and trying to be there for them, but still create income that's ongoing.
Yeah, that's amazing. And that's a really good point because this is a business where you can be as active as you want to be, and you could be doing deals and talking to people and reading books and seminars and courses and you name it, and networking on a daily basis all day, every day. Or to your point, I mean, you can be as passive as you want to be. I mean, you could be sitting on a beach and, just having mailbox money come into the account, on a monthly basis. And so there's so many ways you can find yourself in this business. And talk to me about like the kind of the foundation. Now, did you grow up, was your father investing in real estate at that time, or did it come in a little bit later? Like what was your first kind of introduction to the space? Because I'm interested to hear the evolution over time.
Yeah, it's actually kind of crazy. My great grandfather, I was reminded of this the other day. I did not know him very well, but he lived in Texas and he was an entrepreneur, a businessman. He actually lived to be 106. He lived in the 1800s, the 1900s, and the 2000s.
That's
And
amazing.
he invested in oil and gas, like mineral
Mm,
right. And so,
mm,
he had the land, and he's actually passed that down to family. And my parents are still getting all these years later. I mean, it's been like probably 60, 80, I'm not sure how many years since he
long
bought those
time.
rights. Yeah, they're still getting paid from that, which is just mind blowing. Like they make a good amount of money. There's 5 kids in my mom's family. They're all making money from this all those years ago. So that was really cool. Then my grandmother on my other side, my dad's side, was a realtor for many years. So I got to see her. And then my dad, like I said, got into real estate in 2004. So that was actually when I was leaving for college. So it was a little bit, I didn't get to see it day to day. He was a pastor and money was super tight back then. He didn't make a lot of money, and he was always an entrepreneur on the side trying to figure out like how do I provide for my family. And so when he got into real estate, it was a slow progression. I mean, it was like a lot of flipping and eventually buy and holds. And then he's grown that to doing commercial, multifamily. He's got an old hotel that's been converted into units and commercial space. He has office buildings. He does some short-term rentals, Airbnbs. He's got a little bit of everything. He's just got into a syndication with us last year. And so it's been really cool just to see his growth. And that's definitely where I've learned a ton, is just seeing him and talking to him. I mean, he's in town. He actually has a place here in Virginia. So they come out and stay with us. They were just here last week. So it's always fun getting to talk about real estate because we love it both so much, and we really connect on that.
Wow, that's amazing. That's it sounds like he's had quite the evolution over the years. And talk about such a great place. Like how is Montana and where you grew up? How has that changed over the years? Like he was blessed to be doing what he's doing in that area, right? I mean,
He bought at the right time. Let me tell you, I mean, it's incredible how much equity he has now, just
mm,
because of appreciation and how much
yeah.
they've had such an influx of people from California. And I mean, you mentioned your partners out there. It's just
Yep.
really, really, really grown over the years. When I was there, and again, this was 20 years ago now, there was no speed limit. So I learned to drive like when there was no speed limit, which is kind of fun. Kind of
Yeah, really, that is unbelievable.
yeah, kind of dangerous out there.
Wow.
But there was less than 1 million people when I was there. I don't know what the population is now, but it has just grown astronomically. And the prices of everything have skyrocketed. It used to be very cheap to live out there, and
Yeah.
now it's not. It's making it really hard for a lot of the people that are from there and, can't afford the taxes anymore. Taxes are outrageous. And so, yeah, it's changed a lot. I always see signs like keep Montana or keep
I can imagine.
leave your California in California and keep Montana, Montana, something like that.
Yeah. Wow, that's amazing. So kind of switching gears, you said you worked in tech. Was that what you went to school for? Like, what brought you into the tech space originally?
Oh, that's a good question. I went to school. My undergrad was communications. I have a degree in public relations, and then I ended up getting my MBA. And I wasn't really sure what I wanted to do. I knew something along the lines of communication and business. But my first job out of getting my master's was at a software company, and so I was doing marketing for them, and then transitioned to two other companies over that 10-year span doing sales and marketing. So it was always in that space, but it was a little like I was at two software companies and then one hardware company. So not necessarily tech, that's just kind of where I ended up.
Okay.
And I enjoyed it. I made really good money. It was a great experience, but also the hours were tough. I also had this entrepreneurial itch, I think, just coming from a family with like entrepreneurs. I had always dreamed of having something that was our own
Mm.
business. So it just has been a progression over time. I mean, definitely everything ends up for a reason. There's a reason why
Right.
we're
Yeah, yeah, no, that's amazing. So when did you make that transition into real estate? Because I think you said you were doing some real estate on the side, and then so when did you make that full-time transition? I think that's probably a story, and maybe have some tips that could help a lot of people that are doing it on the side, right? And that want to go full time.
Yeah. So 2020 during COVID, actually, I was really tired. I'd been at my job for 3.5 years. I just wasn't very passionate about it. I had great benefits, great schedule. They were good to me, but I was just realizing like this is not really where I want to be. It's not fulfilling. And while I make good money at the end of the day, it's not about the money. It's about like me feeling fulfilled, doing something I love. Like life is short. So we had had a pretty difficult pregnancy and delivery of our first baby back in 2016. I almost died. It was really scary. And that had kind of shifted my mindset a little bit about, where is my time spent? How do I make the most of it? I have these little children that now I'm responsible for, and I want to invest in them, but I'm also passionate about working. So how can I do both and do it well and also have time for you and balance? And so 2020 rolled around and I realized like, hey, COVID is here. Everybody's freaking out. Are we going to live or die? What's happening? And so my husband actually at the time was a pastor, and he was given a 3-month sabbatical, paid sabbatical from the church that we are at. And so we decided, we've always dreamed of getting on the road and traveling around the country with a camper. And so let's do it. Like what better time? He's given this time off. We have some rentals that'll help. And then I decided, I'm going to quit my job. I can get another job anytime. So I left, and they thought I'm sure everybody thought I was crazy. Why would you leave a good job, and go to this 3 months? And it was some of the best times of our life. I mean, we made memories we'll never forget. We traveled all the way down to Alabama, across the country through Texas and New Mexico and Arizona and Utah and California and up through Montana and, Wyoming. It was this really, really amazing time. And so during that time, we had the chance to dream and think through like, what we really, really want. What is important to us and how do we get there? Like, let's look at the big picture. Let's look at our goals and let's figure out how to get to that point. And so we realized like, hey, real estate's again, where we've done well so far, and the little bit that we've done, I think we need to focus on this full time. So that's when I came back and got my license as a realtor. It was kind of crazy. We had paid off our house. We were totally debt free, had no debt at all. And we were like, you know what? We have all this lazy equity in our home. Rates are really low. Let's do a cash out refinance. Let's pull that equity out, which again, for some, that's not the right fit. They like that conservative, like safety net. But for us,
David Ramsey, I have everything paid off.
exactly. And we realized, there's good debt and bad debt. So how can we use our debt and like make more? And that was one of the best financial decisions we've made. I mean, that cash flow on a monthly basis is really like providing a foundation for us now that we have those additional rentals. And then I was doing transactions as a realtor and also realized the hours are tough. And so that's not been my focus. I still have my license, but I really don't do a lot of transactions on that front. My focus is on the syndication world and creating passive income, helping investors create passive income. So went to go work for, like I said, 2 different firms. And then we ended up starting our firm last year. And it's been a blast. Like, I just love it. Like I said, it's been really cool.
That's amazing. Tell me about what you learned at the syndication firms that you've taken with you, because that's one thing. Coming at myself, I mean, prior to starting our company, I worked at a syndication firm, a fund manager. And there's a lot of times in my business today when I'm doing things, I look back at my experiences there and I say to myself, what did they do? Right? You know what I mean? What did we do in that situation back in those days? Was it a good idea? Was it a bad idea? Would I do something differently? And so you kind of use that as a sounding board kind of a thing. I mean, you use it as like a foundational, okay, what did they do? And now how have things changed? It puts things into perspective. And a lot of times when I see, the people, I like to joke, like, your fund manager was working in tech or, something like that 6 months ago, right? I mean, it's just like, I always think, what do they do in this situation? I mean, when they face new challenges or, challenges in their business, what do they do? I mean, like what perspective do they have, to make a decision, that kind of thing. So for you working at those syndication companies, was there like what skill sets did you learn there? What experiences did you have there that have helped to craft your business now and tailored investments and what you do today and all that kind of stuff?
Absolutely. That's such a good question. And I've been on a good number of
It's a
podcasts.
personal question for me.
I love it. Like I said, I've been on a lot of podcasts and I don't think anybody's ever asked me that question. I think that's a really, really good question. Man, so many lessons. I could talk for like an hour about all the lessons I've learned. So, but I'm going to try to keep it short.
Please go for it.
I think one of the biggest lessons is just realizing like it's a people business. This is a relational business. And every person is different in terms of what they need and what they want and how they're going to invest. And I think just realizing that at the beginning, as I talk to potential investors, as much as I would love for them to come invest with me, at the end of the day, like I want them to do what's best for them and that whatever meets their goals, because they're going to end up being really disappointed if they come into a deal with me that just wasn't the right fit, you know? And so I think that's something I've realized over time is like, I need to ask a lot of questions and I need to figure out what it is that they're looking for, what their goals are, and what their expectations are, because I don't want them to end up being sorely disappointed after a year or two or whatever it is when it ends up not being what they thought. And so it's important that I know my investors, that they know me, that they know us, that they understand what they're getting into, and that there's no surprises. I mean, and there can still be. I mean, we do our best. A lot of the deals we do they're based on assumptions. You know, there's only so much you can guarantee. So at the end of the day, like it has to be some faith, I guess, and you do need to know your partners. You need to do everything, all the due diligence you possibly can, but also remembering that people, they have the preferences, they have their goals, their things that they're looking for. And so again, I might not be the right fit for them. They might be better working with you, Peter. Like there's just so many factors I think that goes into that. And so it's really important. I want to know my investors. It's important for me to have those relationships. Another lesson I think that I've learned, especially with like Wellings, like we were talking about, I used to work for Paul Moore over at Wellings Capital. I think they do a really, really good job of taking any emotion out of their investments. Like they're very focused on looking at the track record of the operators that they're partnering with. That's a huge one. I mean, they're looking at like how many deals have they exited? What are their projections, and are they right? Like, are those assumptions actually valid? Like, let's look at the performance. Let's look at everything. We're going to dive in. They have a huge checklist that they walk through when they're vetting these potential partners. So I think that's really important, is just realizing like people can throw out numbers all day long about yields and the returns that you're maybe going to get. But at the end of the day, like, is that really accurate? Is that really going to happen? And I think in the years past, we've seen a lot of people that are amazing at marketing. And I love market. So don't get me wrong. I like to market, but they may not be good operators. And so I think you got to be really careful about just going to work with somebody, invest with somebody, hundreds of thousands of dollars with someone that you just like, because that's not enough. You need to do more than like them. There needs to be a whole lot more that goes into investing that money, that hard-earned money. And so that's another big lesson that I've seen. A lot of people that just maybe blindly trust and put their money with someone that they don't really fully understand what they're getting into. And then they're disappointed when interest rates skyrocket and no debt coverage is not happening. And so investors are absolutely not getting paid, and they might be losing the principal, which is heartbreaking. And we've seen a lot of that the last couple of years.
Wow, that was amazing advice. And you kind of, one thing I always say is there's emotional investors and there's logical investors. And there's very few that are like right in the middle, where they're balancing both worlds. And I really think you need to balance both worlds. And in my mind, what I mean by that is the logical side is everything you just said when it comes to the deal itself. I mean, from a macro, does it make sense? Is it a smart strategy? From a micro, where is it located? What's the supply and the demand in that exact market? Do the numbers make sense? Or do the assumptions make sense? Or are they, do the projections and all that kind of stuff make sense? And then the emotional side, the team, does the team make sense? Does the strategy make sense for your goals and things like that? And what you're saying with Accredited Life and what we're trying to do with that whole experience is investors need to know themselves. That's so important as well. Because I love what you're saying, where you need to know the investors. We get people who they don't even want to get on a phone call. You know what I mean? Like they'll invest money off of emails and things like that. And it's hard as a fundraiser, as somebody who's raising capital to do what you want to do. It's hard to say no, right? If that's what that person wants to do and that's what they feel comfortable with, who am I to say that is not? But I always like to have a phone call. I like to have multiple phone calls. I like to really get to know the person, to your point, because it's like, sometimes depending on what their goals are, a certain investment is going to make a whole lot of sense and other investments aren't going to make a lot of sense. And I don't like surprises. Like I want to, and I don't want the investors to ever have come by past a surprise. And there's only so much you can do. And I mean, like I've had people where like they've been invested with us for 5 years, like, since day one, and they'll call me and they'll be like, so do you invest in single family homes or multifamily? It's like, you not know this. You know what I mean? Like I do webinars all the time, man. I mean, like we send out emails on a regular basis. Like, it's like, or do you invest in Section 8 rentals? And it's like, yes, I say this all the time. I mean, a certain percentage is always Section 8. So you can only do so much, right? I mean, but just like how the investors need to do things to feel comfortable, it's important for the operator, and the fund manager and the capital raiser, they need to feel comfortable as well. I mean, and I think it comes down, you make such a good point, like it comes down to questions at the end of the day. And there's questions that you should be asking. And I think that is important for the investors too, are they asking me the right questions? Because if they're not, then they might not care so much. You know what I mean? Like, so I think that's important. You know what I mean? Like, as an accredited investor who's due diligencing deals, if the person on the other line isn't asking many questions, then there might be something wrong with that. You know what I mean? Like they might not necessarily care. They just want your money, right? You know what I mean? Like, whereas if you're trying to build a long-term relationship, you need to really get to know somebody. And I always like to figure out like what their experience is so I can craft it to their point. You know what I mean? Like, and you seem like somebody who's religious. I think that with like, that's one thing that Jesus did better than anybody, right? Is he met people on their level. And I think as a fundraiser, I mean, you need to meet people on their level. And the only way you can do that is by asking really good questions. So I love what you're saying on both sides of the spectrum, just with raising capital, but then looking at deals too. So what do you look for? Talk to us about the deals that you're doing, and what do you look for in deals? And you come from a great place there. So like, what have you taken with you, when it comes to due diligencing deals and all that kind of stuff? Let's talk about that.
Yeah. So our focus is on finding really solid partners to do deals with. We come in as the co-GP on these deals, and we just have a small amount. I don't have a huge list of partners. I don't want to do a huge number of deals. Like I just want to focus on the very best of the best and the best of the best partners that I can come alongside and work with. And so we have an awesome partner here in Virginia that we did a deal this summer with. It was a 100-unit multifamily property here in Lynchburg. And so I know that market very well. That's where I live. I'm actually the only GP on the team here in Lynchburg. And so it was nice that I can be over there on a regular basis. And this group has been around for a long time. They have got over 3,000 units. And so they're very well established. And they're not just in Virginia, they're working in a couple other states as well. And so they've got a great team though. And they're just so thorough. One of the guys used to work for Fannie Mae. And so he's just amazing at underwriting and very conservative. For me, I like conservative deals. Cash flow is very important. We live off of some of our cash flow every month. And so that's something I look for as well. I'm not real focused on huge gut jobs like that. I love value add. I think there's a lot to be said for that. But for my investors, I'm go more the conservative route. And so that deal we got here in Lynchburg was an amazing, we got it at a big discount. And so it's not a huge value add. There's some things we can do to increase the value of the property and make the units better over the 5-year hold, but it's like 98% occupied. So it's doing well. It's already going to hit 6% return in the first year, which is our preferred return, and it should increase over time. Our goal in that is to more than double investors' money, like a 2.5 equity multiplier over time. And again, that's a projection. We can't guarantee that, but it's just increasing rents over time. It's like 3% rent increases yearly. And then, like I said, some minor renovations as people move out, and we'll see if that warrants a larger bump in the rents. And so again, not a huge undertaking, but again, I think getting it a good deal. It's an A-class location, like a B-class property. And so that's one partner. We're looking at right now a build-to-rent community down in the Myrtle Beach area. And so they've done some of those, and they've been operating phenomenally. And so we're looking at another deal, hopefully for early next year in that area. And so that's exciting. And then I have another partner that does assisted living. And so we did our first assisted living deal last year with them. They have others, so this was not their first, but they are in Wisconsin, and that's a different market for us, but they know that market extremely well. They have so much foundation built there and people on the ground that are doing such a great job. And so that property's been doing phenomenal. My parents actually invested in that deal last year. It should distribute 8% this year. And so right out of the gates to already be hitting, that cash flow is really strong to me. And so we're working on more deals with them. And that's been exciting because there's such a growing need for that population. And I love the fact that we're able to provide housing for them, good quality housing where they're getting care and community, and we're able to make an impact, So that's one that I'm passionate about and excited to do more in that space over time. Again, it's a slow progress. We're not jumping in and doing too much because I really don't want to overwhelm ourselves or our investors or anything. So that's really been our focus right now is multifamily and assisted living. And then our business also has been incorporating in the last about year and a half, I guess, since we started short-term lending. So we've found we're very involved in our real estate investment community. Like I said, we have our own rentals here. And so as I've gotten ingrained in the community, I've noticed a need for hard money loans. People that are doing rehabs here, they need access to cash. And so we've been lending our money personally, my husband and I. And then this last summer, we started bringing on investors that wanted to put their money to work short term. They like the syndications, but they're like, hey, I can't do a 5-year hold, but I could do a year. And so that's where it's totally different. You're on the debt side versus the equity side, and there's not the tax benefits. I mean, there's just, it's so different, but it is a nice way to put your money to work in real estate and also help transform a community, see things change and for the better. And so that's been our other kind of side project that has been going really, really well. And I love getting to be out on the job sites with the guys, visiting them, seeing how they're doing. We're managing draws and just taking care of those relationships so that they continue to grow. So snapshot of our business. It's a little diversified, I guess is a good word.
Yeah, so that's amazing. And I love how you kind of started with what you knew, and where you knew and kind of in your backyard. And then as time's gone on, you've branched out into other markets and things like that. What's the Lynchburg market like? I get emails from, I think a brokerage in that area, and the pricing seems good, and it seems like it's an up and coming, it's a historic market. And, what's that market look like and how has it changed over the years and where do you think it's going?
Yeah, I mean, I've been in Virginia for 20 years now, 19 of them in Lynchburg, and it's changed a lot. I mean, we've got some big employers. We have a number of colleges. It's a college town. I went to Liberty University, so we have that's a big employer here. I think it's probably our largest employer, or maybe top two. But we see a lot of people come in and out because of college, but then it's really interesting how many people end up staying or end up moving back. My husband and I actually moved away for a year up to Northern Virginia, and then we ended up coming back. And so it's kind of sucks you in. It's a really beautiful area. It's mountainous. There's a river that runs through it. And it's just grown a lot. Like employers are coming in, a lot, like I said, a lot of rehabs are happening because it is historic. We got a lot of older houses, like 100, 200-year homes. And so there's a lot happening with that. And our downtown has been really revitalized, which is cool. I remember years ago when we had moved away, we came back for a weekend. We were here for a wedding and we parked downtown and our car was actually robbed. And we had a bunch of stuff stolen. I mean, it was just parked downtown on the street. It was, and I wouldn't necessarily have said back then it was an unsafe area, but now looking back, like if we parked down there, I would never have any concern about our car being robbed. So that speaks to like our downtown has really transformed over the years. And so it's been really neat to see, I mean, just a whole lot more housing coming online and seeing a lot of development, a ton of apartment communities that have been built. And so it's been really neat to see the growth and people that are staying around and want to buy a house. And I see that from the realtor side, like I said, and just the transactions that are happening here. Years past, obviously, when interest rates were really low, there was a ton of transactions happening, and it's slowed down, I think, with interest rates rising, but they're still moving. I mean, we're still seeing properties move, and it's growing. So I love that. Rents have stayed, we've seen pretty steady growth. I think they've flattened out right now with our rentals. They've mostly kind of flattened, but still steady. And we're still seeing those, occupied.
That's awesome. So just tell me about the kind of the goal moving forward. Man, you kind of spoke to it a little bit, but it sounds like you have a couple partners that you've identified that you like a lot, that you want to continue to work with. Are you also starting to have conversations with others as well? And if so, where are you finding the people? How do those conversations typically start? And maybe give some tips, because a lot of accredited investors are doing that themselves, right? Looking for people to invest in and all. So just curious to where you're finding them and the kind of how the conversations go. How you kind of nurture that relationship and make the decision. Okay, we're going to allocate capital here.
Yeah, good question. So I think there's a lot of power in like LinkedIn. I love some of those social sites. LinkedIn is probably my preference for that. And that's actually where I connected with one of my partners, and we just grew that relationship over time and got to meet each other. And so LinkedIn has been really powerful. Another one of my partners was actually recommended to me through my business coach. I had hired a business coach, and she was working with them already, and so she could speak to her experience, working with them. That's big. I usually ask for, hey, can I talk to a couple of your investors before we go any further? I really want to know about the experience they've had working with you, and if what you're saying is really true. I would definitely say investing in, whether it be a business coach or investing in going to conferences. That's another place I've found some really good partners, and just people, like I'm in a mastermind and we see each other at conferences, and it's just nice to connect and get together, grab a meal together. So I definitely recommend spending the time and money if you really want to focus on this. I think there's a lot to be said for getting in the room with people, not just over, the internet, but over in person, I think is really valuable. Even your local investment community, there's a lot of value there, and you're going to meet a lot of different people and different things that they're investing in and ways they're investing in real estate. But I think there's just a lot to be said for getting in the same space with people and having one-on-one conversations or group conversations. And so those are probably the biggest ways. Like I said, masterminds, I think, is also helpful because we're getting to talk about operators and hear about what's, if they've worked with this group before or this group. It's a small world. I mean, at the end of the day, like there's a lot of groups out there, but there's also like things that have happened, and you can eventually figure it out, find it out. Like you want to know what you're getting into, and again, where you're putting your money. And when I'm working with somebody, I want to make sure that they're approachable, that they're responsive, that they're going to get back to me within a pretty good amount of time. I'm not going to be sitting and waiting for a week or 2 weeks to get a response.
Yeah.
And I want to see their track record. I want to know that they're a really solid operator. They've been doing this for a while. I'm not their day-to-day, managing operations. And so I want to make sure that my partner is phenomenal, that they can take care of it. And so we do regular calls, GP calls, whether it be monthly or quarterly. And I hear what's going on, and then I'm able to translate that information to my investors and speak into it. If there's issues, I can share my opinion and hopefully add some value and help if need be. Again, I'm on the ground here in Lynchburg, so I can go to the property. We have an awesome property manager managing it day to day. And so yeah, I mean, there's a lot of things. Again, this is another conversation I feel like I could probably talk about for an hour, because there's just so much that I look for, and it's not something that I decide overnight, like, oh, this looks like a good partner, let's work with him. Some of these folks, it's months and months or like a year before we decide to move forward and work together.
It's a courtship, right?
It's a courtship. Yeah, because once you get married to them, you're married. Like I want to do my best to never have a divorce, So how can I do everything possible to make sure that it's a good long-term relationship? And so it's not something that I jump into or take lightly. It's a long-term relationship, and I want to know them really, really well. And I want them to know me too. Like I don't want this just bring in capital, or I help a whole lot more than just the capital piece. It's a ongoing relationship, and how can I add value on the investor relations front? That's my background. Marketing, sales, like the operations side. We have our own properties we operate here. So I get to be involved in that.
That's amazing. I love what you're saying there, and a lot of similarities, because my background is heavily on the sales and marketing, investor relations side as well. So there's a lot of things you're saying that definitely resonate with my thoughts and around this stuff as well. Now, would you continue on the co-GP route? Do you have any plans of a fund in the future, or what's your thoughts there? I know that you hear mixed reviews depending on the person and their appetite and their investors and that kind of thing. So curious to hear your thoughts on that.
Oh, I'm really torn about that. That is something we talk and think a lot about. Like I mentioned, we're doing a lot on the debt side and doing loans. And so I'm kind of torn right now. Do we really pursue hard after that and grow that side of our business? But I still love having the long-term offerings for our investors. With these syndications that are typically 5 to 7 year holds, and there's all those benefits. So I love that side because I think it really helps investors get into deals passively. But the debt side has also been really rewarding for us, and good. We're making good money on that side. So I'm not really sure yet. That is something we're talking through and thinking about and looking at options for that and how to grow it. It's bringing on team members and figuring out how to make, because I can't do it all, and my husband, my partner, can't do it all either. And so we're trying to figure out the balance of like, how do we use our time wisely, and what's going to serve our investors best? Like, what are they looking for? The fund is great because it does give them that access, that diversification. And, you're typically taking some type of fee, like a management fee. And so that helps to offset some of the costs because it's expensive to start a fund. And so that's another, factor that we have to think about is like the time, the money, the ongoing maintenance. There's just a lot that goes into that. So it's definitely a bigger endeavor, but I see benefits on both sides, and returns look different on both sides. I mean, every deal is different, every fund is different. So we are navigating that. That's not a good answer to your question, but we're trying to figure out the best route to go.
It gives some good perspective on your mindset around it, and kind of some insight into your thought process and what you're thinking and all that kind of stuff. So I think that's a great answer. And talk to me too. Just we'll wrap it up here. Being that you have a sales and marketing, investor relations background, what are you doing to find investors, to have great conversations with investors? I've been doing that kind of stuff for 10 years now, and things have evolved so much over time. Back in those days, finding a deal on LinkedIn or Facebook was like unheard of. And I always joke, I have a couple stories about that, you know what I mean? And how it's become so common now. And it's one of those things where it's bred a lot of opportunity, now that you can access investors and they're kind of more friendly to invest, or more what's the word, just to find something through those channels. But at the same time, it's created a ton of competition. And you said it before, sometimes I almost get weary when somebody's really good at the sales and marketing side. I want to see that company has somebody who has the background and the experience to execute as well, because that's so important. For a fund or for any operator to be successful, you need to be well capitalized. You need to be able to raise capital, access capital, but you have to execute as well, right? So curious, with your background, what are you doing to forge relationships with investors, to talk to new investors on a regular basis, and to raise capital?
Yeah, so I mean, I think most of us start with like friends and family, and that's kind of where we build our foundation, because those people are close to us. We have those conversations with them regularly. They can see what we're doing. And so, but I think one of the most important pieces is not just starting a relationship and getting them into a deal. It's that ongoing communication, like I mentioned. It's the ongoing, like, providing them value, giving them deals that are phenomenal that they want to get into, and it's going to really help move the needle and reach their goals that they're looking for. And so I think if you're doing well by them and you're living up to what you say you're going to do, they're going to tell their friends and their family. And so for us, like, a big one is just referrals, asking for them, asking for testimonials, just trying to get out to widen that net. And so, when we close out of deals, we write thank you notes and we have a gift that we send them. And we're just really focused on, like, how do we give them the best experience, the best service, so that they want to keep doing more deals with us and that they want to tell their friends and family about us. And so that's a big one. I do get some leads from like LinkedIn and some of the social platforms, or maybe being on podcasts. But a lot of it's just local knowledge and getting in front of folks and having those conversations. And, a big one we've gotten more recently is through retirement funds, people that are just wanting to diversify outside of their traditional stocks and bonds, and they want to get into real estate. And so they've got, some money sitting there, and they're not really happy with the returns. And so they're able to go into a deal that's earning 8 or 10% annually. And they're like, hey, this is pretty cool. I'd rather do something like that. So that's been a big one. And I want to focus on getting more of that in the door in the future. And I think partnerships are important too, like I've mentioned. And so we're learning and figuring out, like, the best there's different routes for how you get investors in the door. But I think at the end of the day, it's for me, like, how do I take the best care of my investors so that they just naturally want to tell their friends and family, and that will just help us grow organically, so that we're giving them really good deals, that they're just thrilled to get into. Every time I open something up, they're like, this is awesome. I'm so excited to, to put my money into this new deal that you have.
Yeah, that's a really good point. And if you treat people well, you do what you say you're going to do. The best capital raise is from people that are already invested. Yeah, you can't beat it. I mean, because they know what you're doing better than anybody else, and chances are you know them better than anybody else. So that's always great. And I think kind of what you were saying with just the communication and the courtship on that side of the business is just as important, because I see it all the time. Like when I'm looking to personally invest, personal funds or retirement funds outside of our business, so many people don't get back to you, and I'm guilty of it too. I'm sure there's investors out there that would listen and say, never got back to me. So it's just like, it happens, right? You know what I mean? But I think creating a system where you can be, I had a mentor in college who would say pleasantly persistent. I think is very important because it's a courtship. They're not. You certainly get the low hanging fruit and people that'll invest off of one conversation, but chances are they were watching you for months or even years, I mean, prior to coming in, but maybe not, but I think a lot of times that's the case. But it takes a bunch of touches and it takes time to get comfortable with somebody and that kind of thing. So you got to be persistent over time and consistent and just communicate. And I think that's an important part of it. It's just not, one conversation is not going to do the trick, right?
Oh, it takes time. Yeah. Any other recommendations? I'm taking notes as you talk. So, any other recommendations? You've been doing this for a long time. Maybe what other recommendations did you have for connecting with?
Wow, you're turning the table on me here. I think I have yet to find that golden ticket. I mean, and the thing too with like investment clubs and bigger pockets or passive pockets now and all, there's so much competition there, right? You know what I mean? And we talked about this before. I mean, investors only, especially in this space, they only have so much money to invest at the end of the day. So when you go into a pool of a million other, investors and there's a lot of competition there, they're going to tend to gravitate to the companies that have been around for 15, 20 years. They have audited financials. They have 50 people plus on their team and $1 billion under management. Now, not everybody can compete with that. You know what I mean? And fortunately, there's a lot of investors that understand there's drawbacks to those companies as well. And we both worked at firms that were much larger than our firms now. And I'm sure there's things that you saw or learned along the way that you think there's certainly things there where they were that, like, companies that have been around for a while, chances are they were built for a strategy that was good a few years ago but might not be so good today. So for somebody that's investing in a company that's been around for a while, it's like, I want to find out, how have you evolved over the years to be competitive in today's marketplace? Because what happens is you make hires based on a strategy that was good 5 years ago or so, and then how are you evolving? You can't just fire everybody and rehire a new staff for a new strategy, that kind of thing. But that kind of digresses from what you were saying. So I think it's forging your own path. You know what I mean? I think it's having your own brand, creating your own relationships, going to the conferences, doing the podcast tour. All that stuff is important, but at the end of the day, you have to get people into your world, I mean, your universe, and just being consistent and persistent, just being really good at the basics, right? You know what I mean? Just like being out there, being consistent, and then and telling a consistent story, I think helps to some degree as well. Knowing that the markets are going to evolve and change and that kind of thing. But it's I think you just have I think you have to build your own personal brand, right? And starting local and starting with people is a great way to do it.
Yeah, that's good. Thank you.
So, Rebekah, how can people find you? How can they get in touch? How can they learn more about what you're doing? How can they get into your world?
Yes, I would love to connect with your listeners. So I'm on LinkedIn. Like I said, it's Rebekah. It's spelled Rebekah. So maybe you'll have some show notes or links that
Yes,
with my LinkedIn profile. So that's one. And then my website, you can see it's up there. It's Tailored Investments, spelled a little differently, but it's just .co at the end. So visit our site. We have like a free guide that we give out and just some more information about us and what we're doing. I'd love to schedule time and chat over the phone or Zoom just to get to know, if you do have investors or listeners that are interested, just to get to know them and hear about their goals. And so those are probably the two best ways to connect. We're also on Facebook and Instagram. We have a YouTube channel, so some videos out there if you want to check those out. So
awesome. Well, Rebekah, thank you so much for being here today. I really enjoyed the conversation. I wish you all the luck moving forward, and hope to stay in touch with you. And we do a community kind of stuff I think we were telling you about before. I'd love to have you come in and talk a little deeper onto some of these things. I'd love to learn more about how you approach new investment opportunities and the questions you ask and things like that. So I'd love to invite you to come on there sometime and just continue the conversation. And I strongly suggest our listeners to reach out and continue the conversation.
yeah, thank you so much, Peter. It's good to be here. I appreciate the time.
Awesome.